Jim, talking to a client the other day, prospective client, he's asking about putting $1 million a year through this. And through the conversation, he says, how much will I have in the first year? And I say, well, you're going to probably have about 62 cents on every dollar. So 620,000. And there's a couple Mississippi's of silence on the other end of the phone. As he's thinking through that cash drag that we call that 38% cost in that first year. And as we talked through it, we got through the first 10 years and whatnot. And he saw the light of why that this is a race, a marathon, not a sprint. You know, we always ask the question, you want to start first or finish first if we're running a race? And of course, everyone wants to finish first. But let's just talk. I'd like to hear you address the audience about, hey, how do we address that 38%? And in a multitude of ways that we could talk an hour on this. But the one thing that I want everyone to realize is in our show notes here, we've got a reference to the $10,000 in motion video on our YouTube channel. So check that out. That's the second video in the show notes here today. But why don't you address that, Jim,
okay.
And we'll wrap up the show with this.
Okay, so I love this question, by the way, because I'm gonna answer the question by asking you a few questions about another business we have.
All right.
Okay, because this is the bottom line of that question.
Yep.
Owner versus customer.
Yep.
Or owner versus non-owner. Okay.
Yeah.
We have a business that we're launching in Louisville right now, right?
That's right.
Okay. The person running that business, they're making money right now.
That's right.
All right. All right. And are we making money?
Nope.
What are we doing?
Yeah, we're
investing money.
Yeah, we're capitalizing the business.
That's right. And we're in a cash drag situation right now.
Yep.
Okay. Are you okay with that?
I'm excited about it, actually.
Why? Why would you be excited to have cash drag in the beginning?
Because I know what it's going to pay 6, 12, 24 months from now and beyond. It's going to pay me a lot more than the cash drag right now.
Right. Okay. So let's go back to the policy. If you go to page 45 of Nelson Nash's incredible book, Becoming Your Own Banker, and you look at the CD sister versus the IBC sister.
Awesome part of the book.
Sister is the customer and the IBC sister is the owner. And in the first year, they put 5,000. Why 5,000? Nelson wanted this to work for everybody. And he says on page 14, you have to have imagination. Okay. So our $1 million client, okay, he had to have enough imagination to multiply from 5 to 1 million. Okay. But the bottom line is, in Nelson's example, the CD sister is getting 5.5% netting for, she puts in $5,000. She has 5,200 after the first year. Right.
Okay.
The IBC sister puts in 5,000 and has $2,000, a little bit less than $2,000, 1,900 something.
Yep.
Less than what we're showing today. Right.
Yep.
Okay. But the IBC sister ends up with $706,000 more. Now remember, they're only putting $5,000 in. Right. I mean, the IB or the CD sister ends up with 258,000. The IBC sister ends up with $706,000 more than that.
And they only funded this for a few years, right?
They funded it for 7 years.
Yep.
Right. And they financed a $10,000 car over and over again every 4 years.
Now, by the way, example of the possibilities.
The possibilities. If you want an explanation of this, set up a meeting through our website to have a coaching session. We'll walk you through this. You'll see the difference between the owner and the customer. But there is, if you want to be the owner, there's an investment. That first year cash drag is an investment. Typically, I mean, I wish we had just had a bunch of 45-year-old females that would show up, because their policies are so efficient. They're like 105% in the second year, meaning I put that $1 million in and I have 105% of what I put in the second year.
Yeah.
But let's say you're like one of us old guys and it's only 97 or 99%. basically no cash drag because I got a ton of death benefit. And if I graduate real early, then, then my family is going to be yelling bingo again. So, but within a few years, really the second year is really close. And again, depending female, male, underwriting class, somewhere around 100% the second year, which means now as the owner, I'm breaking even and I'm going to start to make money on this. No banking, Nick, yet.
Right. No banking.
No banking yet. But when you look at page 45, when does the IBC sister blow past the CD sister where the CD sister is never going to see the IBC sister again?
It's about a year.
But when they start doing what?
When she starts borrowing from it.
When she starts banking. So what does that tell me? Put in my $1 million, use my $620,000 right away, because I'm going to start seeing those benefits and recovering that cash drag. And I'm going to do it a lot faster than you might think.
Yeah. Yeah. Because you're going to be using the insurance company's money, deploying that. If I deployed 620,000 and in the first year I recouped, say, 800,000 with the insurance company's money, didn't I just earn 180,000 with the insurance company's money? I start chipping away at any cash, quote unquote, drag that I experienced. Why? Because of my behavior. And what we've seen people do is, recoup that cash drag in just a couple years. I mean, my own personal example that I've shared multiple times, I did it in the first few months and then finance the rest of the policy with the proceeds from the first behavior move. So it's all very doable.
So Nick, think about it. Who is going to pay that cash drag ultimately?
Whatever customers I have out in the world.
Yeah. Our assets.
Yeah.
So don't look at it as a cost to you. If you're putting that money in motion the right way, somebody else is going to pay that cash drag. It's going to take a couple of years, but they're going to pay it, not you. Yeah. And when I think about this, ultimately, what's our goal? Financial independence, right? So the more money we can get in motion, the faster we can get to financial independence.